Hello, Deep Value community. Thank you for joining me. This is our value investing journey, so please subscribe so that you can get my next video installment. I had a question the other day from Igor, and he asked me what kind of things matter on a balance sheet. So I'm going to show you a business that I kind of know because I just wrote about it just 2 days ago. So we'll come here, we'll look at Snap. For me personally, I just like to go through the SEC filings just because you can go to the company's website, but it just sometimes it's difficult to find. So you just come straight up onto the SEC file and you can just look straight up here. So my favorite document is a 10K. You do have to kind of read it a little bit. I'll show you in this video some of the things that I would look out for. So one of the things that I just because we're here, one of the things that I would look at is just to try and understand the top 3 risks that a business kind of has to go through, because you do kind of read through these, but you get really quick at this. So the more you do it, the quicker you become. So I would just look here. So for example, in this example, it's the user base that matters. The company Snap. So the user base is very fickle. So that is something that is a risk. So if they're not able to keep growing the user base, that would be something that is a risk. That's common sense. This is some boilerplate stuff. So basically just saying that the operating system can work and work, blah, blah, blah. That they use cloud, that's fine. So here, it generates most of its revenue from advertising. So you see here, basically close to 100% of its revenue comes from advertising. Now, if you follow this sector, you look at, let's say, different companies and you say, okay, advertising sector in 2020 is looking weak. So this could be a risk for the company. You just have to think so I have no position in Snap, so I'm free to talk about it, but this is one of the things that I wrote about on my Silicon Alpha article, that earnings are coming up, by the way, on Tuesday. This could be something to look out for, if I was actually right or wrong. So anyway, so balance sheets. So if you come here to the top of the 10K and you look at financial statements and you look at balance sheets, okay, so here you can see the business has 2 billion in cash and cash equivalents. So that's a very strong position. The market cap of Snap is approximately 20 billion. So it has receivables, and you can see that the receivables are not shockingly high, because sometimes, and not in the case of Snap, but sometimes you can see that those receivables are just really, really high. That could mean that the business is struggling to collect that cash. So if you look at a business and you see that over time the receivables are just getting really, really extended, but there's a lot of cash on the balance sheet, that would be huge red flag there. So yeah, just you can see that this is not shockingly high, and the current assets are at 2.6 billion. And you look here and you see that on the balance sheet, its current liabilities are only 500 million. So that's clean. The company is in a strong financial position. You can straight away. But if I was to do a bit more due diligence, I would look and I'll see, okay, so it's got some senior notes that need to be paid off at some point. So it's got about 900 billion of senior notes. So I'll just go very quickly to look at long-term debt. So I'll come here and I just see that the business has 1.3 billion of debt that we just saw. And the business, so the notes mature in 2026. So it's still a long time away. Hypothetically, this is a long time away. Hypothetically, Snap could generate some cash between now and then, so it will be able to refinance that. And it's not a lot. It's not a lot of debt that it has outstanding. And I'd also look at the commitments that it has against the company. So you can see here that there are some commitments, but then it's not nothing too serious here. So this is a fairly well supported business. I would just in this case, I will also look at just because we're here, the cash flow statement. And you can see that the business is actually at this moment in time really struggling to make any type of cash flows from operations, and you can see that the stock-based compensation is by far the bulk of the add back. So this in my opinion, this is a business that's going to struggle to kind of reward its shareholders. This is just my opinion. I mean, I've been wrong before, and I could be wrong again. Um, and you can see here that, so that's basically the convertible that was issued, and you can see that it has. So here's the thing. So as the share price goes higher and higher, higher, the team, Snap's team, is incentivized to cash in their options. Now, what happens is that as the share price goes higher, management cashes in their options, because they believe that, it's a good point for them to start selling out, and it starts to infuse some cash into the business. Now, this is not, it's not cash flow from operations, so it's not from the ongoing business. What happens is if, for example, the share price starts coming down, the management stop cashing in as much, and that kind of works in a negative way, that there's less cash coming into the business also. Conversely, they would need even more stock options to kind of compensate management to retain a strong talent to the business. So these are some of the things that I think that are worthwhile looking at. As I did in another video, it's just quick and dirty to kind of go through the net working capital here, and just to see if there's anything that really is shocking in this case. There's nothing really too shocking here. One thing that I would keep an eye out for is that they're extending their liabilities here. You can see that 146 million is quite a change from negative, because you'd expect, liabilities to be paid off at some point. So that when that comes through over the next several quarters, that would be, if I was a Snap shareholder, I would be looking to see if they keep extending off the liabilities, because at some point that has to reverse. Like I said at the beginning, so you can see that the account receivables, they're not actually bringing in that much in terms of the accounts receivable. So this, you can see that there's a negative cash flow. So you can see that although they're booking revenue, they're not actually bringing in that cash. So that's one thing that I would look at in the next quarter. Maybe I'll do a video after the quarter is up. So yeah, I hope you found that useful. And please let me know if I did not answer your question about the balance sheet. And as always, please subscribe. I'll see you next time. Bye bye.